And joining us today is the Global Head of Macro Strategy, Yianos Kontopoulos. Thank you very much for coming on the show, Yianos, and good morning. A US Trump presidency, just broadly speaking, is it going to be good or bad for the US economy and the world economy?
Well, we don't know. That's the honest answer. But the market, obviously, like in every occasion, has an opinion. So the market has moved to price a break with the past in a fashion I would basically describe it as pricing new policies that would boost both growth and inflation in the U.S. And that's reflected in higher yields, in a stronger dollar, in higher equities, steeper yields, yield curves, and so on and so forth.
The Wall Street Journal just a few days ago said that, forget all of the controversial headlines, Donald Trump could end up being more like Nixon as a president, having his own brand of populism and right-wing priorities. Do you think that that's going to be the case? In some cases, spending on things like infrastructure, will that end up kick-starting the US economy, or net-net, will it lose those kind of jobs that it creates domestically because of his rhetoric on trade if he follows that through?
So, again, the history, it rarely repeats itself, and at best it rhymes, as per the saying. But on our side, as strategists, we have to actually do the scenario analysis. To some extent, we have moved into just do a hypothetical example by saying, an additional $1 trillion of fiscal policy. How does it look in terms of its effects on markets? And so far, our conclusions are that they're somewhere midway in terms of the range of the possible, in terms of whether, it ends up being efficient, it ends up being meaningful, and so on and so forth. So I would qualify the results so far in terms of the market anticipation as being slightly on the optimistic side. It's not excessive. So as such, we should probably just, not fade those moves and assume that until we find, what's at stake, we have to actually respect those moves. But it's very hard to say it's going to be good or bad, and I don't think it's probably the right exercise at this moment.
How do people prepare themselves to trade a Donald Trump presidency? Do they sell the dollar, buy something like the Swiss franc? What would be your advice to people out there who are looking to put their money to work over the next 4 years or so of his presidency?
So, in the period right after the global financial crisis, we've seen many occasions where the market has attempted to trade a break with the past. So far, it has, been probably better to fade those cyclical moves because they end up being very short in duration. Having said that, as per my previous comment, we don't really have excessive moves so far. So on our side, we are optimistic in terms of the equity moves that we have seen so far. We probably wouldn't chase, fixed income lower at this stage. We wouldn't expect yields to move dramatically higher from the levels that we are encountering right now. So we would be receiving real yields on the U.S. market. And we are very, very close in terms of fading the move in the dollar. I think we're right at that cusp. But again, we have to be respectful of the moves because we don't have really any evidence yet. The market is just, pricing in moves at this stage. And until we are fairly confident they're excessive, we have to be a bit more circumspect in our moves.
Yianos Kontopoulos, thank you very much for joining us there from UBS today.